Stocks are getting hit on Thursday, and they're getting hit hard, with the S&P 500 moving back below its 50-day moving average. This is the first time the index has lost this significant measure of technical support since July. And investors are really kind of getting rattled by all this, given that we had had a very calm and cool rise to new record highs as early as last week. Now, there's a number of catalysts in play, one of which is the selling pressure hitting Apple in response to the so-called Bendgate scandal with the iPhone 6 Plus, and also implementation problems with its iOS 8 rollout. We're also seeing selling pressure hit the energy sector in response to lower crude oil prices, and also there's reports out of Russia that the Russian parliament is looking at paving the way for nationalization of foreign assets. This is in response to economic sanctions put on that country from the West, and that's a big deal for stocks like ExxonMobil and Chevron, since a lot of these companies have invested quite heavily in the Russian energy sector. Now, setting all that aside, I think the biggest issue here, and one that's going to be, I think, growing in intensity and importance in the weeks and months to come, is what's going on with the Federal Reserve policy. QE3, this bond purchase program that's been in place since 2012 and has really supported the stock market by encouraging share buybacks, this is coming to an end potentially as soon as October. But in the end, this rate hike hasn't happened since 2006. So people have kind of forgotten what it's like to live and invest in an environment of higher borrowing costs and ever-rising interest rates, and that's rattling a lot of folks, and that's something that's going to continue in the months to come and is going to add a new dynamic to a market that had become very calm, overconfident perhaps, over the last 2 years.